Good morning, everybody, and this is your S&P 500 day trade setups for today. So we are still stuck between the moving averages on the 8-hour that bounce off the structure that we had here to the downside, and we'll get to that on the lower time frames. I think the key thing here is it does look like we have a pretty big range that is forming, and we've got the oscillators grouped to the downside and crossed over and pointing to the upside. So this 155 EMA area, which is a previous high here, and it's actually a zone, is what we need to clear for us to start getting a little bit more momentum to the upside to come and test these highs again. So just drilling down through the time frames quickly, and on the 3-hour, a little bit of a different picture forming. It does look like there's another little channel forming on the bottom line of this channel. So I don't want to make this too messy, but you'll get my picture there. So you can see there's our smaller channel, but this looks like a flag. So we've kind of moved down, bouncing around, just stuck in amongst moving averages flat, going nowhere, and then the oscillators grouping to the upside now. We do have a rejection bar here as well on the 3-hour, so that's something else that you also need to pay attention to right now. The market is still very confused. So when we start getting down to levels that we're interested in trading, you can see did get a higher high eventually. It took a while for us to get that higher high in place, but we have got a higher high in place from Friday. But Friday was a big down, big up day, and then this was sideways, up, down, up. So it was just as bad. Grouping of the oscillators to the upside, we've got a crossover. So there are some bullish signs, but there's also some bearish signs. So I would be very cautious still. I think these previous highs here are going to add some fuel to the fire, and let's just put that level in. So if we can maintain this level, then you're definitely looking for 38.28. But again, this is going to be a 5 or 15 minute chart. So if you look at this, when we were doing the video, it was going sideways here, dropped, didn't really find support to the left. I mean, we can argue that that cluster there is what we're looking for, and there was a little bit of a Brooks gap here as well. So hindsight being perfect science, yes, there was an opportunity here. We had a crossover, we'd broken through the 155, came back, and then there was our retest. So if we were paying attention here, could have been an entry there of 125 point risk and basically a 350 point gain. But then we just basically went into these massive swings. So if you look at the oscillators now, oscillators grouping to the downside. So all things being equal, you're probably looking for a continuation up. Now, first level to pay attention to this 3807. Then you have this 3798 or 3800, I think, is probably what you really want to be paying attention to, which is going to be there, I assume. Yeah, 3800. And then just below 3800 is 3791. So, moral of the story is quite simple. Pull back onto any structure here, and we see inside bars, engulfing bars, or pin bars. You can see there's an engulfing bar off structure. Here's another engulfing bar. Here's another engulfing bar. And there's also off structure. If you just put your level in to the left, you can see there basically a double bottom on that. That's what you're looking for. If you see that kind of price action off these levels, you're looking for a long on the break and a stop below. So trend is currently up on the 15 minutes, so that's the direction you want to be going. On the hour, we may be getting a trend, but there's also a bit of a flag forming within the channel as well. So there's lots of mixed signals here. So whatever it is that you're going to be playing, even if you get down to the 5 minute, what you're going to be looking for is a retest of a breakout, a retest of structure before getting into it. So you can see these levels are quite far apart on the 5 minute chart, and you can have a 50-60 point stop loss based on the structure that you'll have. So that's kind of the way that I would be looking at this today. It is volatile, so get down to lower time frames, sit down, grab a cup of coffee, and just wait for the structure, wait for the volumes as well. So in other words, wait for the US Open, which is now an hour later for us sitting here in Europe, or in Europe time zones. So that's kind of my play today. Just wait for the pullback, buy into it, and the trend is up at the moment until it changes. And it may change at the drop of the hat, so be very careful because our higher time frames are indicating that it is very, very tired at the moment. So conversely here is true as well. If we break above 38.27 and we come back and retest it, then I suspect this little channel I've got here is null and void, and we'll probably come up to the top here. And that, ladies and gentlemen, is going to set up a massive cup and handle. So here is your cup and here is your handle. Then we'll be looking for a break of the highs of last week, which would be 39.29. So that's kind of my view today. Could be a little bit tired and just going sideways at the moment, but there are small opportunities here. Just keep the lower time frame charts open. Anyway, hope that helps, and we'll catch up with you tomorrow morning. Cheers for now.